Welcome back. October housing starts, building permits coming in lower than expected, lower than September, rather. Joining me now to react, former Reagan economic advisor. He's the author of Taxes Have Consequences. Art Laffer is here. Art, great to see you. How do you read this latest detail in terms of economic data, the housing data?
I think Bob Nardelli's comments were right on the mark. I mean, exactly that. This is not good news. This is a harbinger of tough times to come. You know, when you think of it in context, Maria, I mean, we have a very, very low participation rate, which means a labor supply is not there. It just isn't. We have high inflation. We have an economy that's on the brink, and policies, debt, deficits, huge. So to start a downturn at this stage, it's really very depressing and really bad news.
Bob?
Yeah, Art, listen, you've been around this much longer than I have and a lot more experience, but I see those as key negative indicators going forward. So
yeah, I do too.
Art, tell me this. What are the top one,
What do you
two,
mean I've been around a lot longer than you, Bob?
I don't think you even know
Just
what
joking.
you just said. I'm like, wait, what? You've been around this longer than me.
You know I'm old, but Methuselah, I'm not.
You've both been around there, Bob Nardelli.
Listen, I'm 74, so I've been around a long time also, sir. I meant your experience.
Well,
I apologize.
You meant his experience around economics.
Experience
You've been
around
a business
economics.
guy. He's an economist.
Yes, sir. Yes, sir. Wow. Thank you for correcting me.
We all laugh.
So
the highlight of the show right there.
Yeah. So listen,
oh my God.
Let's focus on the economic side of this for a moment then.
Let's go for it.
Yes, sir. So it seems to me this administration can do a couple of things very, very simply and very quickly to have impact on what's taking place. The only part of the administration that's doing something is the Fed. They're raising rates. So they're taking a hammer nail approach. You know, the Fed is the hammer, and each of us as consumers are the nails, and they're just pounding us down. But don't you think a change in energy policy, the change at the border, there's a number of things this administration can do immediately to help us turn this thing around?
Yeah, there are, but they're not going to do them, Bob. We're not going to get energy decontrol. I just don't think that's going to happen. I don't think the Fed's going to do what it should do, which is stop price controls, stop trying to control interest rates, let markets determine what interest rates are, and shrink the monetary base or the balance sheet of the Fed. That's what they should do, and they could get that inflation under control. In fact, they could have done that quite some time ago. There's no way this administration is also going to stop spending, so the deficits and the debt levels are going to increase. That's going to happen as well. And when you start all of this with a very low participation rate and the housing market starting to tilt to go really down, which it really is, that's a bad sign for the future of the economy. And it also indicates the severity of the downturn. Now, I believe we are in a secular decline rather than in a recession. I think it's secular, but I think this bodes very poorly for the U.S. economy to come.
Hey, Art, it's Mark Tepper. Good morning. Question for you.
Hey,
You just
Mark,
mentioned.
how are you?
I'm good. You just mentioned recession, and I'm curious, like, what you expect for next year. Because one of the key things I look at is obviously the yield curve. Most people look at the 2-year, 10-year. I'm looking at the 3-month 10-year, which is pretty severely inverted, and it's predicted 12 out of the last 11 recessions, which means there's only been one false positive. And I tend to be in the camp that, I don't want to fight that data. I feel like within 6 months, we will be in a worse place than we are right now. We will be in a recession. What's your take, Art?
Well, let me first do the 12 out of the past 11 recessions. You don't want to fight the data. I understand that. But the reason that there were 12 instead of only 11 is because the policies of Reagan change that one that was going to be a recession into not being a recession. In other words, policies can affect things, and they really can. And as it is right now, with my expectations about this administration's policies, I see us to secularly decline. It's what I call the Japanification of America.
Yeah.
We are now becoming one of the slow growth countries, just eaten up by our own. Look at the debt levels to GDP. That's just a very bad sign. When you look at the inflation, there's nothing that has been done so far that gets me to change my mind about inflation. Now, we may have some nice inflation numbers for a month, 2 months, 6 months, but the underlying problem of the Fed's balance sheet, of the causing people not to work, all of that. We're going to have more money and less goods, and that is an inflationary environment. And then you look at all the other policies, tax policies, and all. I mean, hiring 87,000 new IRS agents for $80 billion, that's all negative for growth. That's negative for prosperity. So I'm very concerned about next year, and I would say it's going to be a very slow growth year.
Yeah, all great points. Here's Batya.
Hi, Batya Ungar-Sargon from Newsweek. I guess my question is, you know, the housing market, right? It's impossible for first-time homeowners now. Wages are up 5%, but inflation eating all of that away. I mean, we're overseeing the death of the American dream here. What is your response to that? What can we say to working-class Americans? Where should they be looking to for hope for getting that American dream back on track?
Yeah, I would not use the word death. I mean, we've been through this death a number of times, and the economy comes back. It's all based on policies. And once you get the policies mix done, and I hope it's during the next 2 years, the Republicans learn their lesson and they go back to being the stewards of the economy. If there's one thing a Republican is supposed to do is have a good economy, green eye shades, low taxes, spending restraints, sound money, minimal regulations, free trade. That should be the Republican agenda. Once that happens, we can come back to prosperity. But we've gone through long periods of very dark periods and come back strong. So that's where I think we are right now.
Yeah.
And I don't think the new home buyers have much of an opportunity.
Well, we'll see if the Republicans could stop reckless spending. I mean, that's, you know, because I would say the root cause of this spiking inflation is the COVID relief package, $1.9 trillion signed into law in March of 2021, and the spending just took off from there.
And then we'll build back better, the little one. All of these are there. Now he's asking for more money for Ukraine.
Yeah.
We're asking more money for COVID-19 relief. There's no end in sight to their wanting to spend other people's money.
Great to see you today. Thanks very much.